Yeah, thank you very much for the nice introduction. Well, would like to do some remarks on the problems of long-term finance, also on this newly created long-term investment fund of the European Union, and also then give some ideas of changes to financial sector regulation which are related to long-term investments. Well, of course, much has been already said about the problems of long-term finance. Just let me focus on some specific issues. I think, well, the problem is, of course, the long-term horizon, of course, which gives rise to, say, forecasting errors, which makes, say, the assessment of future risks and future returns very, very difficult. Just imagine that it's even a very difficult task to forecast the economic growth of next year. And looking in the future, looking at capital market returns for the distant future of 10 or 20 years, it's almost, yeah, it's really very difficult to give any ideas on what will be the outcome of specific investments over such a long horizon. And of course, not the least, it's also political and regulatory risk, which changes the current assessment of risk and return then later on, after some years, unexpectedly, and sometimes then also deteriorates the originally profitable investment and turns it back to an unprofitable one maybe. The next point, of course, is it's low liquidity. Usually you don't have exit markets for illiquid, and long-term assets are usually liquid. Timothy Shakespeare just told us he just defines long-term asset and this LTIF fund as it's an illiquid one. You don't have exit markets for such funds, and therefore it's very difficult for investors to have a large part to put a large part of such funds into their portfolio, but maybe a small part. Nevertheless, institutional investors it's still possible for banks, pension funds, and insurance companies to invest in such illiquid and long-term assets. There is no shortage of, say, specific legal entities in which to invest. They could create a project company which is designated just to invest in a specific long-term project. And maybe in terms of loans, you could also think about long-term loans and syndicated loans. It's particularly difficult for private investors, even if a private is defined as a small pension fund. It's very difficult for them to invest in such investment or companies. Therefore, I think the opening of the LTIF for retail investors, even if retail is meant to be small pension funds, is, I think, a very good idea. Well, let me just skip this one. The headline is characteristics of infrastructure. I would like to compare just infrastructure projects with biomedical investments. And I just skipped one slide and go back then to this skipped slide later on. I think this ordering is a bit better. Infrastructure, of course, by definition, long-term project. Usually looking on the risk and return, you might say that, yeah, not all of infrastructure projects is really innovative and very risky. It's also, so to speak, known old technologies where the estimation of the risk and return, it's not so extremely difficult. You could at least look at your experience with older projects which you have done, and then extrapolate maybe with some adjustments the risk and return into the future. Maybe there's also very risky new innovative projects, but the bulk of these investments is, I think, not so extremely risky. Therefore, you have a relatively low default risk of a single project, and you could you have more stable returns and can predict it much better than, for example, for biomedical investments. This is it's also long-term. Most of these biomedical investments for inventing new drugs, for example, is very long-term. But you have innovative research, very innovative, very risky, where you actually don't know how the future risk and return will be distributed. You have no idea maybe on that. And you have a very, very high default risk for such projects, where you might say that the default risk might be 90 or 95% for a single new project. But nevertheless, both parts, infrastructure and biomedical investments, have this long-term aspect in common. Well, proposals for a solution might be, for example, this LTIF fund, because I think it fits to both types of investments. Biomedical investments, it's not actually in the scope of this idea of LTIF, but it could be a solution also for these biomedical, very risky investments. What you need for biomedical investments is you need a large fund to be able to diversify away risk of these single projects. You have to increase a lot of different, hopefully not so much correlated projects with high default risk for the single project, but on average you might end up at a large fund with a relatively moderate overall risk, and therefore it's possible to invest in such a large fund and to buy parts of this large fund and have a very diversified portfolio. For infrastructure projects, it's not actually necessary to invest in many different single projects, but every single project might need a lot of money, and therefore you do not need a large fund for diversifying away parts of this idiosyncratic risk of single project, but it's more the problem of maybe these investments are spread upon amongst several countries in European countries, and therefore it's necessary to have a harmonization of regulatory rules and of the legal framework. And therefore I think this idea of this LTIF fund for the European Union is a very good idea. It gives us the possibility for a very, very large fund. It harmonizes rules amongst the European countries. And it's a closed fund. Well, closed fund, of course, is not really an advantage, but I think I'm not so skeptical like Timothy Shakespeare. But, I think what other possibilities could be there instead of a closed-end fund? An open-end fund would actually be not possible to invest in such long-term illiquid assets. I think it's a good idea to open such a fund also for retail investors, because it's possible to mobilize much more capital to invest in such a fund, even if it's only indirectly invested via insurance companies or pension funds. And I think looking at this biomedical research, it's also an interesting vehicle for other purposes which are not actually in the scope of this idea of the LTIF fund. It could well be a financing tool for the pharmaceutical industry. Well, let me end with some remarks on long-term investments and banking regulation and some ideas where I think there should be some add-on to regulation. Well, I think banking regulation is even in the banking market, but also in the insurance market, is pro-cyclical, very pro-cyclical still, and also the introduction of Solvency II is a measure to introduce pro-cyclicality even more on the insurance side. And therefore I think pro-cyclicality is also an impediment to long-term investments, because many banks and insurance companies have in mind short-term investment horizons, short-term goals which they have to reach every year. And long-term investments actually might be a problem to manage these short-term goals with these long-term investment needs. And also liquidity needs as a problem for long-term investment because insurance companies and banking only are able to invest small parts of their capital into such illiquid investments because otherwise they would not be able to sell parts of their investments very rapidly. Therefore, one suggestion, one very small suggestion for an add-on to capital, to banking and insurance regulation would be to increase the importance of anti-cyclical buffers in this regulation, and to maybe you take some of the Basel III regulatory rules and to substitute them by anti-cyclical buffers, or to increase, to add an additional buffer but make it anti-cyclical instead of this pro-cyclicality, which is part of the whole banking and insurance regulation. And this, of course, could be also done by just setting one slice for long-term regulation, and to make this capital, this minimum capital requirements based on an anti-cyclical buffer, just to put long-term capital and make these capital needs related to an anti-cyclical buffer, and instead of the pro-cyclical regulatory rules we have in mind usually. Thank you.